Hi friends, welcome to this pre-market analysis of Nifty, where on a chart we try to make informed guesses of where buyers and sellers are. These are the supports, resistances and fair value gaps that we had drawn. So our analysis was that Nifty could consolidate in this range for the rest of the month, and it is almost holding true here. So today it did indeed consolidate in this range. Let us, as usual, delete all our previous analysis and start from scratch. We always start with the monthly time frame. So for all first timers, what I do here is I analyze the biases of Nifty on each time frame, starting with the monthly time frame all the way down to the hourly time frame. This is an indicator that I am testing, so I do this manual analysis every day and then go back to the indicator to test how well it is working. Now, this is Nifty on a monthly time frame. What is the bias here? Bias is still not sure. Why is it not sure? If you will just delete these two candles, then it is bullish because it was making higher lows. Higher lows means buyers. From here, buyers are selling at a higher level with confidence. Now, that is not the case here. The opposite is also true. Lower highs means bearish. That's also not happening. So now, right now, we have these two candles that are bring sort of uncertainty into Nifty. What are some important levels to look out for? This swing low, swing highs and swing lows are liquidity areas, liquidity zones. So this is where Nifty is taking resistance, sorry, and this is where Nifty will find support if Nifty decides to come down. At least it is expected to find support. So these are the two important levels on a monthly time frame. Moving on to the weekly time frame. The bias on a weekly time frame is bearish, and it is going to stay bearish for some time. So because this is the high, that makes it bearish, because this high is lower than this high. So lower high means bearish. And are there any important levels that we need to mark? Well, I'm not going to mark any of these levels right now. That I'll do in a lower time frame. Right now, what I would like to mark is this bearish weekly fair value gap. This is a fair value gap, and the market orders made Nifty move so violently that fair the limit orders failed to execute, and that's some sort of a definition of fair value gap. So those limit orders should be pending in here, and then Nifty, that's like easy money. Nifty should come and pick these orders, and then for that is the basic concept of fair value gap. And there's a swing low within the fair value gap, and that makes it a higher liquidity zone. If you can look carefully, that is exactly where Nifty is taking resistance. Let me mark it in red. So I hope all this movement just makes sense for you right now. Now going over to the daily time frame. On a daily time frame, what is the bias of Nifty? Nifty is bullish. It is bullish here. So why is it bullish? It is making higher lows, and that is why it is bullish. Is there any fair value gap in this area? Nothing. There is one lower down here from here until here, and that has already been tested once. So any zone of buyers or sellers that's already tested once, I would not consider as another entry point for a trade, because that has already been tested once. Now going over to the 4-hour time frame. Now on a 4-hour time frame, Nifty is bullish. Why is it bullish? Because you see, this is a swing low, this is a higher low. So a higher low has been created, and that is why Nifty is bullish. But on a 4-hour time frame, there's something interesting happening. This is a fair value gap here. Okay, let me just draw it and demonstrate it for you. It is an interesting formation. This is a bullish fair value gap that's happening. And here was it not selected? Yeah, now it's selected. And this is a bearish fair value gap that's happening. Let me mark it in green. So this is like in a time frame, there are like overlapping fair value gaps in the opposite direction. So this is like a formation, a typical formation for a reversal. Overlapping fair value gaps in the opposite direction is a typical formation for a reversal. Keep it in mind. Let's see if it actually happens now. Going over to the hourly time frame, let me just delete these fair value gaps. It just makes it very cumbersome for analysis. And on an hourly time frame, this is a swing low, and that swing low has it been taken? That has not been taken. There is no higher low created. Now this is a swing high, this was a swing high, and then that swing high was taken. So it is actually not sure on an hourly time frame. So let me make this not sure. Just means no higher lows or no lower highs created. And you see this fair value gap and this fair value gap is like opposite fair value gaps created, and opposite fair value gaps are sharp turns. That means Nifty could sell off. That is what it implies. So any reversal starts happening in the lowest time frame. For me, it is the hourly time frame, and then it percolates upwards over to the 4-hour and the daily and the weekly and ultimately to the monthly time frame. So that's how a reversal happens. So at first view, it looks like on an hourly time frame Nifty has reversed, and on a 4-hour time frame also Nifty has reversed, and everything matches with the narrative because this, let me go to the monthly time frame, this is a monthly resistance level, and ideally Nifty should take resistance and a monthly close below this, or at least at this level, not above this level, is what is expected from Nifty. But if Nifty manages to close above this level, then it could be a confusing sign or a slightly bullish sign. Right now it doesn't look so. Everything is looking south for Nifty, and let's see how the rest of the month goes. It should either consolidate here or it should sell off. That's what should happen to Nifty. Now let us go on to the hourly time frame once more and see if we have any trades for tomorrow. Well, I would not trade in these kind of markets because, as I said, we still have 7 days to go in the month, and there's Nifty might not give a specific directional movement. If it does, I'm expecting downwards, or it could consolidate violently in this area. It could take stop losses on either side. So I would prefer to stay out of the market in these days for intraday directional trades. That's all for today. I am not a certified analyst. I do this only for educational purpose. Thank you.